November. It's down 1.8% from the month prior, and this drop driven by a slump in multifamily projects. Still, new home inventory is currently at a 17-year high, and home builders are optimistic about the outlook from here. I spoke to Jim Tobin, who is the CEO of the National Association of Home Builders, yesterday. Here's what he had to say.
Get ready for what I think is going to be a golden age of housing production over the next 4 or 5 years. We really need to get those pieces of land in the pipeline now, and we need to get them in there affordably so that we can meet demand in the future.
So what could take us into that golden age of housing? We have Lawrence Yoon, who is the chief economist over at the National Association of Realtors. Lawrence, always a pleasure to grab some time with you here. Let's just start there. What are some of the driving forces or factors that would play into any golden age in housing?
Well, good morning, Brad. Certainly, the home sales have been rising recent months after being stagnant in the early part of the year. And the reasoning is very simple. We have more inventory. So more inventory is bringing out more buyers. We know that the mortgage rate is not fully behaving as the Federal Reserve has been cutting rates, mortgage rates stubbornly refusing to decline. But the more inventory, more choices for consumers are bringing buyers back into the market. That's why it is critical that the builders ramp up production in the upcoming years. So I do believe that the builders need to produce more and will produce more, thereby providing that golden years upcoming.
And so as we see the waning impact of election uncertainty, how do you anticipate that will be passed through to the purchasing activity in the housing market in 2025?
Very good question, because all the past election data shows, independent of which party wins the White House, that post-election, there is slight bump in home sales. I think this is just a natural phenomenon of people essentially being unglued from television and getting back to the real life. Furthermore, that there is certain certainty. People know, for better or worse, what the policy will likely to be under the new administration, and therefore people are more confident about making the major purchase, like home purchase, and therefore I anticipate that little additional bump post-election.
As I was taking a look at some Redfin data, and I know NAR, you've got your own excellent data that you read through, but one of the headlines that Redfin had this morning was talking about existing home sales rising to the highest level in over a year and a half. And some of that was tied to factors that we just mentioned a moment ago. But what else do you think needs to play out in order for this to be broader momentum for existing home sales?
When you look at all the corporate data, like, for example, home sales coming out of RE/MAX, home sales data coming out of Coldwell Banker, and other information is clearly indicating that the market is seeing some momentum. I think the continuing job creation is certainly a help. The mortgage rate, even though it's not declining, the stable mortgage rate, and let's remember, under 7% mortgage rate is below long-term historical average. 50-year mortgage rate average was roughly 7%. And we know that people who purchased home in the past years at 10% mortgage rate, 8% mortgage rate, whatever it was, they built wealth over time. And I think Americans recognize the potential. They want to get into the market if inventory shows up. So now that the inventories are beginning to show up, we are seeing good data coming out of Keller Williams and other brokerage companies that shows solid momentum building up.
I want to get to the National Association of Realtors 2025 housing hotspots here. You've listed 10, including Boston, Massachusetts, Hartford, Connecticut, Grand Rapids, Michigan, Phoenix, Arizona, among the top of that list here. And I'm actually proud to say that as of this year, I've been to all of these cities. So I can say something or another about each of these housing markets. But why do you expect these cities to be hotspots next year?
We were looking at some of the net migration trend. Is the job creation a little faster compared to nearby neighboring metro markets? Other factor is whether or not inventories are showing up, and the millennial generation who have deferred home purchase, likely due to the housing affordability challenges. Well, high-income millennials where are they going into? Where are they? There is a pent up demand, and also we are looking at the home sellers who have been sitting in their home for many, many years. We know there are life-changing circumstances, and generally Americans would move in 8, 9, 10-year time period. So if a locality has many homeowners beyond that tenure, it's certainly implying some pent-up seller, more inventory expected to come onto the market. So that's how we made those selection related to top 10. But I will say, majority of the U.S. markets, aside from the top 10, I think they will see a measurable improvement in 2025.
And at what price? How is affordability anticipated to fluctuate from your outlook?
The affordability will improve. The Federal Reserve will likely cut interest rate today and possibly more so next year. Mortgage rate has not yet responded, but it's just inevitable. With the banking lending rate being so low, mortgage rate will tilt downward, so that will help affordability. Income increases a little faster than home price growth. That will help affordability and also more supply, certainly giving more options to the buyer. Buyers would have better negotiating power to get into the market.
How many rate cuts do you anticipate we would need to see in order for there to be a real dent and an improvement in affordability next year?
The Federal Reserve likely will make about 4 rounds of rate cut next year. But I think the key factor for the mortgage rate is really the 10-year Treasury yield. And that will be impacted about how we address the future budget deficit. So if somehow the budget deficit projection is manageable rather than getting out of control, that will meaningfully bring down the mortgage rates.
Lawrence Yun, great to catch some time with you. Thanks so much for joining us here on Yahoo Finance.
Thank you.
Certainly. Coming up, everyone, your Yahoo Finance market update. We'll check out how stocks are moving and run through 3